I was meeting people all over the country, going to boot camps. I was running, and I listened to Michael Blank's podcast. And that was one of the podcasts that really made a difference. Just an engineer talking about doing multifamily deals and telling me all the reasons why it's better than the exact same issues I was having in single family.
Patrick.
Garrett.
Thanks for coming on the show today, man.
I'm excited.
So I've known Patrick for a number of years, and Patrick actually initially found me when I was doing something called a deal desk, and I had basically students coming in and pitching deals, and then we'd see if we want to do them. Patrick found me, and I cut a little side deal with him, like, all right, let's do this mentoring thing. It was like I was kind of like his little mentor in the beginning, and he was like the only guy I was talking to like that. And Patrick was just trying to figure out his path, and he's a very smart guy. He's got a corporate W-2. His wife's got a W-2 at the time, and he's trying to figure out his path in real estate. And he was like trying to put deals together, and they weren't quite happening or whatever. And then this guy, all of a sudden, just boom, took off, and is now raising tens of millions of dollars in capital. And so I want to back up a bit, Patrick. And after all of our talks and everything that kind of we had, what clicked in your head that this is the way forward for me?
Well, so I lost everything back in 2009 and 10 doing really risky pre-development stuff. So back in the housing bubble. So that's led into some of my ultra-conservatism. The challenge for me was after that, I was high-tech machine design, automation, robotics engineer. I was very comfortable. My wife and I had a great life.
Did you hear that? What is it even? I didn't even hear what the hell that was. It's like a high-tech, dude, this guy's insane. Like he's engineer mind. Even his title is something you can't even say. It's crazy. Go ahead.
Yeah, so we did a bunch of high-tech stuff for like solar, aerospace, electric vehicle. Assembly, robotic assembly. It was a lot of.
And he says it so nonchalantly too. It's like, oh yeah, robotics, aerospace, technology. Like,
there's a lot of correlations to investments, though, right? Because you're putting together these programs that cost millions of dollars, and there's an underwriting template, there's costing template, and then there's an art, science, and technique, and cross-functional needs. So putting together these multifamily deals actually correlates in some way, but you got to actually launch at one point. And that's one of the things that Garrett, I like to tell the story because I was underwriting deals and I was sending them to sponsors, and sometimes they just blow me off. Sometimes they'd give me some feedback. Garrett would actually go like nitty gritty into the details, and I walk away just, oh wow, that's awesome. I really feel like I learned something, and it slowly adjusted my course and started to build my buy box. And I had done a few deals on one, and I remember reaching out to my wife. She was like, well, if Garrett thinks we should do this deal, we should do it. If he doesn't, we shouldn't. And so at that point, you were like a gatekeeper in that way. You didn't even know that. But and those deals went very well, so I'm very appreciative of your help.
Yeah. He's always figuring out how to add value in his situation. But I think what was really cool to see is how you dialed that in to a very specific niche, and you built your buy box, but then you had to really go and produce monster value to the industry. So like, how did you figure out how to do that? I'm curious.
Well, so there's lots of aspects of the business, right? There's your capital raising side, and then there's your deal side, then there's your management side, right? And so I kind of went at them both at the same time. I built a website, told my story. I had a video on there, still to this day. It's actually the same video. I still have hair in that one. Just telling who I am, where I came from, what I'm doing. If you want to jump on board, right? People resonated with that. I started putting an opt-in page, started doing content, wrote a bunch of stuff, started when I was doing due diligence on properties, even when it wasn't my deal, recording myself and putting it out on social, sending it out in emails with the description. Starting to build a little bit of a following, right? People started getting interested. It actually took me 2.5 years from the time that I said, I'm not doing single family anymore with my wife. I don't know if you know this, but she was there for my last single family closing. We got married then because I was moonlighting single family, which was a nightmare, and running high tech in the day. And then it took 2.5 years to kind of marry her and then learn, and before I did my first multifamily deal. And so during that time, I was meeting people all over the country, going to boot camps. I was running, and I listened to Michael Blank's podcast. And that was one of the podcasts that really made a difference. Just an engineer talking about doing multifamily deals and telling me all the reasons why it's better than the exact same issues I was having in single family, right? And so it really resonated. And then I eventually started realizing that the asset class has a lot of growth, and I can partner and not do it all myself. And I can use others' capital and others' talents and skills to expand into better markets in the country, right? And that's kind of when I got to that point, it was just a matter of warming up to a deal from a very conservative, safety margin, safety factor engineer, and somebody who's lost it before in real estate, actually pulling the trigger. Yeah.
Wow. Yeah. So I think that, all your past experience of conservatism, what are some ways now that you look at deals with conservatism? I'm just curious.
Well, in today's market, things are very different, right? Because it was 1, 2, 3 years ago that it was pretty easy to be like, well, here's the rent escalators, and here's the insurance escalators, and here's what the nearby comps are doing in rents, and we can put this CapEx in and increase the rents, and super straightforward. It's a little more challenging now, right? The game has changed. Our strategy in our recessionary acquisitions fund, which is a cash fund where we're just buying assets in cash, that's actually not a value play. So there's right now, if you're selling, it's because you have to. It's not a good year to sell. Yep. All-time low transactions right now. Inflation hitting your payroll, hitting your expenses. Things are taking longer. People are run ragged after COVID with delinquency issues. It's brutal. Compound that with insurance growth and interest rate growth eating at operating income. Excuse me. Right now, if you're cash heavy, you can just start buying things very quickly, right? And you got to go direct to owner for that. And that's our strategy now. Because direct to owner gets somebody who hasn't been having a broker whispering in their ear these completely outrageous prices and it's still a huge gap. It's closing. There's still a huge gap. But when you go direct to owner, we're able to pick up assets. Like we just dropped $4 million in cash and bought an asset that appraised for $5 million. But we close in 12 days after completion of DD. And we're about to sell it, pull about $3.5 million out of it in less than a year. So I think those are the opportunities we're aiming for now, because the calculus is very simple. You make the return on the buy versus a longer hold. That's the strategy.
Yeah. I mean, he's right. Right now, you really can't forecast the future too well. It's hard. You got rents declining, so you can't underwrite, I've got these monster rent raises happening year over year. You've got cap rates that are blown out higher than they've been in a very long time, and you can't really understand exactly what that's going to look like in a certain amount of time. But what you do know is that there's distress, and if you can take advantage of that, you can do really well, most likely in the future. You just have to pick up some of these deals that are crazy in distress. And so what brokers do and why there's so much friction in transacting right now in the market is brokers are going and pitching the dream to these guys. Hey, you can definitely get this number now. Let me take it out, or whatever it is, overinflating it, and then they get retraded like hell once they get into an actual contract. The deal blows up. But the brokers are really just trying to get the business, so they're going to go and overstate what they think they can get for it. And what's happening is, because the market's so finicky, because you have treasuries moving up and down like crazy, mostly up, deals are just falling out of contract left and right. You put something under contract, the rates go up 50 basis points or more, falls out.
And the lender, too, pulling back.
Yeah.
Right?
And the other issue you have is some of these deals are worth less than the loan amount, which creates an opportunity for someone that can go buy that, but the lender won't let them sell because it's worth less than the loan amount. And so you've got it almost has to go back to the bank in order for you to pick it up. But what Patrick has is a pretty cool vehicle because it's going to be positioned well for these when they do go back to the bank. All of a sudden, they're sitting there, and the direct-to-owner response is actually pretty unique as well.
Yeah, I think there's really two sides to it. There's the buy and sell pricing, right?
Yeah.
And then there's what the lenders will do. And right now there's a banking collapse going on. I mean, Jerome Powell said just on February 6th that we're just now seeing the beginning of commercial real estate's impact on the banking system. Just the beginning. That was like a month or two ago now. So, I mean, people are thinking, oh, there was banking collapses last year. We're through it. There's $1.5 trillion in commercial real estate debt coming due by 2025. 64 billion of that is already distressed, right? People are freaking out. Oh, it's over. BlackRock just spent 20 billion. No, it's trillion dollars, right? And they buy, more core plus, nicer stuff that they're going to hold for 30 years. We're talking about director owner picking up things, picking up assets that you can make the return on the buy. And really, there's twofold. One is acquisitions, and one is debt. And because just like in 2009 and 10, I was getting raked over the coals because I had gotten way head over my skis in development and was upside down on my loan. So I waved that buying opportunity goodbye from the gutter. Better man now, learned hard. But just like in 2009 and 10, you're seeing a huge surge in private debt and private credit. Why? Because interest rates have gone up significantly for the same assets, the same performing quality of loans, the same loan to value. The banks are just pencils down. They're retrading. There's a lack of trust between banks and operators. And as we go further along, the liquidity crunch that they're in because they diversify into bonds and those have devalued. And as Garrett was saying, those commercial loans are not paying off. So where's the money going to come from to create new loans? So that has to come from somewhere. And that just means it shows up with private equity or private debt to be able to charge what used to be 6 or 7 or 8%, now 13, 14%. And that's what our debt portfolio is doing right now. And that's the only reason I'm doing debt, because we can literally return double-digit returns in a 58% loan to value, 89 portfolio, loan portfolio.
Yes. So basically what's happened, you're seeing a lot of equity moving up in the capital stack, right? So like JV equity, you're seeing less of that now. That's turned into pref equity. Pref equities turn into debt. There's just different structures out there. You can get the same returns for less risk in this environment in that form. And so you're seeing a lot of things shift in that way. And what Patrick did is Patrick figured out that you learn the marketing game pretty quickly, which I want to get into a little bit, how you kind of picked up on that so quickly. But he got really good at attracting investors and basically converting investors into some of the deals that he was doing. And then now he's just launching different products that meet the market needs, which is pretty cool. So, but yeah, how did you get into understanding your marketing engine? Because it's not such an easy thing to just pick up on. It seems like you just did right away and got going on. I'm curious.
I did a lot of things, failed on probably 80% of them, but that 20%, that worked out, right? I mean, I'm an experimenter and a tinkerer, and so I did create a platform, like a thought leadership platform, where I'm writing for Forbes. I've got multiple books I collaborated on. I've been a guest on 100 podcasts. That means I've been in front of 100 different audiences. And just like Garrett, he's lending some know, like, trust and some friendship, right, to me. And I'm doing the same to him. And so our audiences are going to share. It's a blue ocean, right? I'm speaking at this event here today. So you do things like this. You get out there, you get your name out there, and people are going to seek you out. If you have enough content, when they land on your website, just like how Nighthawk Equity does and Michael Blanc, then they're going to hang out for a while. They're going to build that know, like, trust with you. And we send out educational content every single week. And I was modifying that on the plane here this morning, making sure that got out by today, Friday. And it's a dedication. And we have a couple things that are probably the hallmarks, I'd say, of what has really separated us from our competitors is, as a company, we have simplifying the complex as part of our EOS, which means we don't use acronyms, we don't use jargon, and we will sit there on a group call and spend 10, 20, maybe an hour rewriting a deck or rewriting an email just to make it so anybody, I always say, can your grandmother's friends understand this? To make it so simple and so basic, just that they inherently understand these complex topics, but when they get done reading it, they don't even notice that they were reading something that was complex. And that's what we're striving for daily. And that's really the whole purpose of our platform, Passive Investing Mastery, right? To educate, to give people mastery in the art of passive investing. Because I was once one of those high-performing, high-income earning guys. I was having a blast, traveled the world, hiked Mount Fuji, whitewater raft to the Grand Canyon, spent 25 days on the John Muir Trail, climbed base camp of Everest. I mean, by all measures, I'm not knocking my prior life, but nobody ever taught me how to invest. All I knew was startup stocks, 401k, IRA, and now I'm writing articles about that's not what you want to do with your wealth. And now I'm putting allocations of the wealthy up saying, here's how you can accomplish that. You give that platform, you give that content out there, and then you simplify it, and then no investor left behind, right? When somebody opts in, we make sure we get in contact with them, we get a call set up, and we get them pointing in the right direction. Those two things have been really great for us.
Yeah, that's so cool. You're absolutely right that there's always going to be a need for knowledge on places to put money, because if you're in a system, which most people are, they haven't learned that. They maybe didn't learn financial literacy. I remember when I was like in college, and I'm like, someone introduced me to like a life insurance agent, and I'm like, this is what I'm supposed to do with the money I'm making from my knife sales, like put in a life insurance, and so that was like the beginning of me kind of trying to understand, all right, there's got to be something more than this. This can't just be like go meet with a financial advisor and they rip fees behind the scenes and don't even tell you, and that's your way forward. It's just, so once you put that lens on, which is what Patrick's saying that he basically did, he's now offering this immense value to people that have some disposable income, that need to do something, need to put it to work, and now he's offering products to people to help them with that, which is amazing. How did you add in, Patrick, the kind of like the paid traffic part of the business? What was, like, if you're getting just getting started in paid traffic, like what do you look at there to have any type of success with it?
So first of all, pretty much out of the box, very little if any success with investments, right? I mean, that's should be said right up front. I hear this all the time. Oh, we ran ads and got nothing, not a single thing. And I think that's because the generation of people that are out now, as soon as they hear or think of something, they Google that person. And they Google that person, and there is not a bunch of stages. There's not a bunch of articles. They don't come up. And you can't sit there and you can't order. I mean, our books are free. I sign the book and I send it to you for free. If there's not enough social proof out there for you to get to know and trust that guy, it doesn't matter where the lead came from, you're not going to invest, right? And when it comes to your retirement account, your kid's college fund, right? People are very hesitant. And so just clicking on a Facebook ad doesn't get you there. Now, what does work is pixeling your website, which means that Facebook keeps track of everybody that comes to your website. They don't tell you who those people are, but everybody that lands on your website, if that person also goes to Facebook, they'll say, oh yeah, we know this person, he went to Patrick's site. And if Patrick runs a retargeting ad, he can retarget those people. He's not going to tell them who they are, but we'll pop this up. And they'll be like, oh yeah, I remember that guy. Yeah, I looked at his podcast, or ordered his book, or I was looking at his deal such and such. And then all of a sudden, we're back top of mind because we have an investment. We actually have something for them now. And so, by far, the lowest hanging fruit is just to retarget. Again, no investor left behind. Even if they come on and off your site and don't opt in, you can still get in front of them when you have a deal. But you would only ever do paid ads if you're looking for a return when you have a deal. I'm pretty sure that to accredited investors, which I've only ever dealt with accredited investors, 100,000 minimum buy-ins accredited investors. deals are like sex to them. Like they're really excited. And I am the same. I don't want to waste my time unless you have something real and some meaty, right? I'm not really that interested. So once you have a deal, if you set the groundwork and you set those tracks and you have a platform and you can develop that know, like, trust, and they can spy on you for 2 or 3 deals and see you on other stages and webinars and podcasts and articles and Forbes stuff and whatever, then you can convert that traffic. Otherwise, throwing Facebook ad spin out into the ether doesn't work. And you get the wrong kind of people that just show up out of nowhere and invest with you. I don't let people invest with them unless I've had a conversation with them at one time, because there are some people trying to drop a $100,000 chip that don't belong in the deal.
It's just going to drive you nuts.
Yeah.
Yeah, don't be that investor, by the way. It drives us nuts. Ask questions, but chill out. It's interesting, though. So you kind of built your bit. You became an authority, and then you put some money behind it you said retargeting is a really good way to kind of help get back in front of these people that have come and showed some level of interest. And it's true. Like, you can't, if someone Googles you and they don't know who you are, they can't find anything on you. They're like, who the hell is this guy? I don't know this guy, right? The more you have out there, it's typically your short form feeds into your long form. And people have to spend at least 10 hours with you to really get to know, like, and trust you and then want to invest. And so the more you have out there, the more they can do that. And that's kind of what it sounds like Patrick has built, quite an amazing engine on that side. But it's a lot of work. It's a lot of invisible value that you don't know people are even watching. And it's funny when, like, the event that we're at right now, which is Michael's event, people are coming up to me that I don't know, most of them, and they're like, I've been listening to you for 2 years or whatever it is. It's crazy. And I get on a mic, once a week, whatever, to shoot a podcast, and you don't know where it's going. So it's a lot of, like, blind faith that it's going to work out. But hopefully it turns into something. When you start to see people running at you with money, and you're like, where did you come from? And they know a ton about you. That's when it gets really cool. But it does take a sustainable effort. And so
I was in the bathroom, and the guy came up right next to me while I was going pee and said, "Oh, I'm a fan." And I'm like, "Of what? What are we talking about here?" And it turns out, same story, right? Yeah. He's been listening to me for a while, spying on me, right?
It's a pretty crazy thing in this world, like, how that works. And so you're just putting out, like, random stuff out there, and then someone will find it, and the next thing you know, they find you.
Authentic, right? Selfies. Just tell your story. My website, just tell my story, who I am, no holds barred, just this is what I'm doing. This is where I'm at with it.
I wear my story on my sleeve, man. Like, I know I've made a lot of mistakes, and I've owned a lot of hood rat properties, and I just tell it all, and that's where the authenticity comes out. And people, just like he said, he related to Michael because of the engineering background. You're putting something out there to an avatar, and the more you understand what that avatar is, the better you can really hone in on that niche and get them to resonate with you, right? So, like, you probably resonate with your whole audience. Like, have you seen anything like that, like a specific type of person that comes to you, or is it kind of across the board?
Real quick, one of the reasons why I saw you out was because I found that long, like, hour-plus podcast where you told the nitty-gritty of everything, where you got to, like, 2,000-3,000 units, and then you lost it all and all the trials and tribulations. And when I showed up in Arizona with my wife to have lunch with you, I already knew your whole story. I knew everything about you. I was like, and so I'm spearfishing the right kind of people, right, to work with, and that's how investors are. Sorry about that. What was your question?
My question was, who's coming to you? Like, are they?
Right?
Yeah, your avatar.
Yeah. So I project this, and I didn't ever raise from friends and family. That's a thing. I never did like a short friends and family. Sure. I didn't even tell my friends and family what I was doing. I got a master's in engineering and MBA. I told those guys, right? And I told high-tech colleagues, ones that had invested with me in multi-million-dollar automation projects. And I was like, well, this is a lot less risky. And you didn't even know this exists. So let's talk about this other venture. those are entrepreneurs, C-suite executives. So I started there, right? I started with the people that I knew and I understood, like high-tech, smart type people in bio and EV vehicle. But when I spoke to that audience and I spoke to those individuals all we knew was to invest in the next high-tech stock and put everything in 401ks and IRAs and gamble. And essentially it's gambling, right? And all these things. And that's all and I want to help those people, right? And I project that and I talk about it in my book. The only thing I want to help is, then I got away from that. I lost everything in real estate. I want to help people invest better. Not only I don't like development, I lost everything in pre-development. I want to buy cash flowing assets in recession resilient markets. I did single family for a while. And I write articles on single family versus multifamily and asset protection and all these things in Forbes to try and make people understand that what's glamorized on these TV shows, on the news, is like these great flipper, awesome jobs. Those are highly risky, highly volatile. You're way over your head in debt, and your assets are not protected because you can. And I mean, it's like these are not good investments, but they're popular. So I really want to help those that are they're working to try and get out. I don't want them to make the same mistakes I did. And so really, it's those guys trying to make it in single family real estate, and those guys that are trying to make it in high tech and have really no idea. There's a whole world of alternative alt assets that are non-correlated, like our litigation fund we're doing right now. It's litigation finance. It's not correlated to gold, to interest rates, to real estate. It's not correlated to crypto. It's correlated to the ability for the United States judicial process to perform, right? And those are the kind of assets which will grow a portfolio, which won't be down all at the same time, right?
Yeah. So Patrick's really smart at finding these really cool opportunities, and you should check them out. Patrick, how can people reach you if they want to?
So passiveinvestingmastery.com, passiveinvestingmastery.com. And if you go to that website, all spelled out, /book, and you put Garrett's name under the promo, I'll sign it and I'll send you a copy of my free Amazon #1 bestseller. Collaborated with some really cool guys, lead guitarist at Def Leppard, NFL, NBA players. It was a really fun book. And so it's not just me with hair back then. It's some other cool people. But I'll sign it and send it to you. And I hope that persistence pivots and game changers, turning challenges and opportunities. I hope that gets you pointed into a good direction.
Cool. Patrick, man, thanks for coming on the show. Appreciate it.